Good morning. Today is Thursday, May 15th, 2025, and this is your daily Austin real estate market update. We're going to take a look at our daily briefing that we put together every single morning, Monday through Friday, so that you know exactly what is going on in the market here in Austin, Texas. We're at teamprice.com. My name is Dan Price. I'm the broker for Team Price Real Estate, a premier real estate brokerage company here in Austin, Texas, designed to empower you with the latest and greatest information. We publish every single morning over 2,000 pages of Austin related real estate news, market stats update. We actually cover the top 30 cities within the Austin area, along with the top 75 zip codes. So go to our website, take a look at everything that we have to offer. Super powerful and intuitive. We're going to scroll down on teamprice.com and we're going to go ahead and click on the Austin Daily Briefing. Scroll down a little bit, click on May 15th, 2025, and let us take a look at exactly what is going on within the Austin market. And I am going to report to you that we have reached a record high number of active listings currently in the market. As of this morning, we are at 16,687 active listings on the market. The previous high was on Monday, May 12th at 16,616. Out of all the active listings currently in the market, more than 50%, 50.5% of those have had a price drop, 46.9 have remained the same, and 2.7 have actually gone up in price. This is going to be your leading and your lagging indicator chart. Leading indicator is going to be the activity index, where we take the pending and we divide it by the active plus the pending. A 25% activity index is going to give you a neutral market, right around 4.5 months of inventory. And you can see that the activity index is at 23.1%, below that neutral market, meaning we are heading towards more of a buyer's market. Months of inventory being a lagging indicator is at 5.94 months of inventory. So far this year, we have had 21,988 new listings enter the market. That is down 4.6% cumulative compared to the same time last year. But keep in mind that last year included all of May, whereas right now we're halfway through May. We are going to set a new record high on the cumulative new listings. Pending listings. We are currently at 5,008 pending listings this morning within the Austin area multiple listing service. That is down 1.6% compared to exactly the same day last year. On the cumulative pending side of things, we are down 18.2% compared to the same time last year. So far this year, 16,667. Last year, including all of May, 20,372. We are going to be negative year over year as we continue to count the number of pending listings from today to the end of the month. I do not foresee that number going into the positive territory. It will remain negative. The activity index, a leading market indicator, which is the pending divided by the active plus the pending, meaning out of everything that could be under contract, what percentage is currently under contract. We are currently at 23.1. Same exact day last year, we were at 27.1. This is the breakdown of the activity index across the top 30 cities within the Austin area. And you can see that the number one city is going to be the tiny little city of Manchac in the southern part of Austin at a very healthy 36.7% activity index, showing high demand, followed by Cayo Buda, Hutto, Del Valley. On the lower side of things, the areas with very little activity where properties are not going under contract, we have last Spicewood at a very cold 7.6% activity index, followed by Smithville at 10.5, Lago Vista at 13.4. That activity index, that low, means a buyer's market. Things are simply not going under contract. Let's keep on looking at the new listing to pending ratio, also a leading market indicator. And what this does is we take everything that is new on the market, we add everything that is back on the market, and then we simply divide it by everything that is active under contract and everything that is pending. And that's going to show us that out of everything that is coming on the market, what's the ratio of properties that are being absorbed by the market on a monthly basis? And you can see that we are currently at a 0.5. And that is going to put us at the substantial increase in inventory. And the reason why is that for every two properties entering the market, half of those are being absorbed by the market by buyers going under contract. Out of every two, one of them is going under contract. So you can see how fast inventory is going to be added to the market in the form of active listings, meaning buyers are going to have more leverage, meaning months of inventory will continue to increase. You're going to start seeing more and more price drops. We are already at 50%. I can foresee us getting as high as 60% with a ratio that low. You can see that the last time we had a ratio this low was back in 2008. A 0.5 ratio is indeed a very low ratio. And you can see that so far for the month of May, if this ratio holds, meaning if we all of a sudden don't start seeing way more pending properties, if it holds at 0.5, it is going to be the lowest ratio for any month of May going back 25 years. That equals an increase in inventory. Now, we take everything that is new on the market, we subtract everything that went under contract, and we're going to get the difference. The difference so far for the cumulative difference from January to May, we are looking at 5,321. That is going to be the highest one going all the way back to 2004. The cumulative difference between everything that is new on the market and everything that is going under contract. The ratio for the entire year, if I take everything that is new on the market, everything that went under contract, we're looking at a 0.66 ratio, meaning the difference between the new and pending 8,561. That is really amazing. That's going to give us that 0.66 ratio. And that's going to put us right back to the 2008, 9, 10, where we had a 0.63, 0.68, 0.63. Of course, the hottest the market had ever been was 2020 at a 1.1 ratio. Way more properties were going under contract in relation to new properties entering the market. That gave us a very high ratio of 1.1. That means that inventory dropped to a record low. Prices, of course, skyrocketed. Right now, we're seeing the complete opposite, a very low ratio. Inventory is building up. Prices are going down. Let's talk about months of inventory. We are currently at 5.94 months of inventory. That's going to be an increase of 24.7% compared to exactly the same time last year, where we were at 4.77 months of inventory. And this is going to be the breakdown of inventory for the top 30 cities. We have 4 cities with over 11 months of inventory: Dale, Lago Vista, Marble Falls, Spicewood. On the opposite side, we are seeing the same cities that had a very high activity index. We've got Hutto at only 3.41 months of inventory, Buda at 3.96, Cedar Park at a very healthy 3.97 months of inventory. But one of the things that we track is the difference in inventory from year to date and year over year. And you can see that year over year, Jarrow has experienced a 113.2% increase in inventory, followed by Marble Falls at 102. Year to date, from January to today, Marble Falls, 120% increase in inventory. Cedar Park at 105% increase in inventory. January, we were at 1.93 months of inventory. Right now, we're still at a healthy 3.97, but the rate of increase is indeed substantial. You go all the way down and you see Hutto inventory has actually gone down year to date from 4.9 months down to 3.41 months. We are expecting just shy of 3,000 homes to sell this month, simply based on what's already sold between May 1st and May 15th. Let's talk about pricing right now, because so far this month, the median sold price is $475,000. That's going to be a gain of 6.1% month over month and a gain of 4.4% year over year. More expensive homes do tend to sell in the first 15 days of the month as opposed to the latter 15 days of the month. So as cheaper homes sell, we do expect this number to go down. Stay tuned. Come back to the website. Come back to this resource. You can find this on Market Cycle under Insight and Statistics, or you can simply click on the latest daily briefing and you can get the latest and greatest. But I do expect this number to go down. And we can see what happened with the average sold price going back 25 years. That huge explosion in the pricing, we actually peaked May 2022 at almost $700,000, 681,000. We're at 623 right now. On the median side of things, we're at $475,000. We peaked May 2022 at $550,000. We're down roughly $75,000. And let's take a look at the high versus low price trends, because we do notice one thing that did change from yesterday to today. And this is where the top 25th percentile year over year is now negative. It's been positive, and this contributed to the bifurcated nature of the Austin market, where more expensive homes are going up in price. That's going to be the top 25th percentile. And the less expensive homes are going down in price at a substantial rate. Even though we are still seeing the bottom 25th percentile underperforming the top 25th percentile, as a whole, the top 25th percentile is now negative. For the entire area, we're down 1.4%. On the top 25th percentile, down 1.7%. What that shows me is that the median price for the entire area is about to go down, and it's about to go down really fast. We're going to see this data in the next 30 to 60 days. Expect a pretty steep drop in the median sold price, average sold price for the entire market. So far this year, 12 out of the 30 cities that we track have actually gone up in price. The number one city is going to be Driftwood at an amazing 21.1% year over year increase on the median sold price. The least performing is going to be Burnett at a drop of 20.8% year over year. And the last two things that I want to show you, one of them is going to be the Market Health Index. And what this does is compiles a lot of information and gives you a health index of the market. We are at 18.4%, which just about matches 2021 at 18.5%. Bottom line, a high number indicates a strong seller's market. A low number indicates a buyer's market, leading in the direction of a buyer's market. Under 30% points to a buyer's market. We are just about half of that. And the last one is called the Inventory Stress Level Index. And what this does is this measures the availability of inventory in relation to what's going under contract. So how stressed is the market in inventory? Think about it as a odometer in a car from 0 to 100 miles an hour. 100, it means we've got really, really high demand. It favors sellers. We've got low inventory. The rate of inventory refresh is not that good, and buyers are absorbing everything. 100 equals hot, equals green, equals a very strong seller's market. We reached 100.9%. Anything you put on the market sold. It didn't matter what the price was, people bought it. Right now, we're at 5.4%. This is going to be also a leading market indicator. It's going to show us what the next 12 to 18 months is going to look like. That's why I can say with a very high degree of confidence that we will continue to experience pressure on pricing. Buyers are going to have options, not only in inventory, but also concessions. Sellers got to sharpen that pencil. You've got to look at the market. Look at the competitive and comparative analysis of your specific property. This is your daily update. You can find all this information on teamprice.com. Scroll down a little bit. You can get the Austin Daily Real Estate Briefing. You can go to Insight and Statistics, and you can take a look at over 2,000 pages worth of stats. You can also go to Market Update and just get a really nice overview of the entire market. And you can also access individual reports for the top 30 cities along with the top 75 zip codes. For example, if you're interested in the 78722 zip code, go ahead and click on that link. You can access this report, and this will give you the most up-to-date data on that zip code, everything that's active. You're going to have affordability charts. You're going to have the number of properties within price points and square footage, activity index, days on the market, months of inventory, what's sold, and the appreciation. All of these reports are updated daily, Monday through Friday. go ahead and take a look at it. Once again, my name is Dan Price. If you have any questions, please reach out to us. We are here to empower you with information. We have an amazing team of real estate agents ready to help you make the single best decision for your family, for your life. And if you are a real estate agent and you want to sit down over a cup of coffee and discuss what we as a brokerage company, what we have to offer, please reach out. Once again, Dan Price. You can reach me at dan@teamprice.com. Hope you have a great day. Come back tomorrow and I will talk to you later.